A very warm welcome to the second in our series of webinars, The Investment Case for Gold. Just last week, we were joined at the Royal Mint by Michael Dorenzo of the Silver Institute and Stuart O'Reilly of the Royal Mint himself to delve into unlocking the value of silver. And a recording of that webinar is available on the Royal Mint YouTube channel now. So make sure after you have enjoyed this webinar, hopefully this evening, go and check that one out as well. This week, though, gold is very much in the spotlight as the yellow metal continues to trade at over $3,000 per ounce. We reflect on its astonishing performance in recent years and its role as well in a diverse investment portfolio, as well as the tax benefits, of course, of owning it in certain forms, certainly in the United Kingdom. Before I introduce today's speakers, a bit of housekeeping first of all. Today's webinar is recorded and will be available on YouTube afterwards if you wish to share it at all or reflect on some of the comments that have been made this evening by our speakers. You can follow us as well on social media at Royal Mint UK. And of course, do visit our website for any market news and information that will hopefully inform your investment decisions as well moving forward. We'll be holding a Q&A as well at the end, so please do not hesitate to add any questions you might have as we move through the presentations into the Q&A section. I will be reflecting on those as we move through the presentations, and hopefully we can answer as many of them as possible. If you have any burning questions, of course, following our discussion tonight, we do have an account management team as well, ready and waiting to help support you through the investment process as well. Right, without further ado, let's introduce our speakers tonight. Shortly, we will hear from the Royal Mint Market Insights Analyst, Stuart O'Reilly. But first, I'm delighted to say that joining us from the World Gold Council is Senior Market Strategist John Reid to understand the safe haven assets role in a diverse investment portfolio. So I'll hand over to you, John. Thank you for joining us this evening.
Thank you very much, Toby, and thanks everybody for joining. I've been asked to give a sort of 10-minute introduction to gold, and I've taken these slides from a recent presentation that I've given. Obviously, I could speak for a very long time about gold. We at the World Gold Council write an enormous amount of research and strategy about gold. And similarly, as Toby said, I would encourage you to head to our website, which is free, gold.org, to find out everything about the gold market that we don't touch upon in this short conversation. So I thought it would be useful just to put gold's $3,000 an ounce in context. It's just about doubled over the last 5 years, which has been certainly a fairly remarkable performance. But it's even more impressive if you look on the next slide. You'll see how gold has performed over the past 30 years. Gold famously hit a multi-decade low of $252 an ounce back in 2001. And in the just under 25 years since then, we're up something like 12-fold. So yes, there's been ups and downs associated with the highs with the global financial crisis and the COVID pandemic, and then recoveries from these incidents has seen gold give up some of those gains, but it hasn't stopped it going on to make all-time highs, certainly in US dollars, and actually in every other currency that we've looked at as well. Next slide, please. If we just look briefly at 2024, gold was the best performing major asset class, beating even the fantastic run that the Mag 7 and other US stocks had. Also note how gold performed extremely well when bonds were down. So it shows you that gold can perform well in an environment where equities are performing well, which is something that bonds tend not to do. Next slide, please. In 2025, gold has started the year strongly. I haven't updated this chart for a week or so, but we're up at about 14-15% for the year. And again, the strongest performer out of all the major asset classes. And compare that to US stocks, which are actually down in US dollar terms this year. So gold's performed well when stocks are strong. Gold has performed well when stocks have been weak. And I think it does demonstrate the safe haven characteristics of gold in what is some very uncertain times at the moment. Next slide, please. So one of the research reports we produce analyzes supply and demand trends in the market. Comes out each quarter, and this is the one that came out summarizing 2024. And it's just worth spending a moment or two on here. Some real headline uh, highlights from that report were gold demand in tonnage term hit an all-time high. The strong areas of demand last year were central banks, who bought 1,000 tons of gold, or about a fifth of the market, for the third year in a row. Central banks massively increased their purchases back in 2022 following the Russian invasion of Ukraine. And I think this is because gold is seen as an asset that they can own, which is sanctions resistant. Now, there's an awful lot of countries now which are former allies, perhaps, of the United States, countries that are reassessing what they should hold in their central bank reserves. And I would not be surprised to see more countries buying gold going forward, particularly if the pronouncements from the White House remain the same. The other big positive was on the investment side. Gold investment increased 25% year on year. That was driven by an end of outflows from exchange traded funds. The strength we've seen in the gold market over the last few years has been driven mostly by emerging market central banks, emerging market investors, even jewelry demand from time to time. But it hasn't really been reflected in Western investment demand. That began to change in the second half of last year. In terms of negatives, well, high prices mean less gold bought for jewelry. I think that's fairly obvious. And on the supply side, we saw supply increased to hit a new all-time high as well. Next slide, please. So what do we expect for this year? Well, we put out a market outlook in December of each year, and we look at what will be the drivers in terms of the components of supply and demand. We're expecting more investment demand in 2025, and we're seeing that coming through already with some very strong numbers from exchange traded funds. We would expect to see less jewelry demand because of higher prices. And we may actually be too optimistic there. I think jewelry demand could fall further because the gold price has done better than we were expecting. In terms of central banks, well, our team that covers the central banks are always a bit conservative, and they're expecting slightly less central bank buying this year. But as I said earlier, because of the uncertainties surrounding US political and economic policy, I suspect that actually might surprise to the upside as well. Higher prices means more scrap comes back to the market. So I would expect supply to increase. What does this mean for price? Well, in the Outlook document, we outlined a number of economic scenarios for gold. And on average, that was pointing to modest positivity for gold's returns in 2025. We've already exceeded those levels because I don't think it will be economics which is driving gold this year. I think it's politics. Next slide, please. So really to summarize, gold had a stunning performance in 2024, record highs in many currencies, all currencies actually. It was driven by emerging market demand, plus some speculators as well. But there are some signs that emerging market buyers are slowing down somewhat, particularly on the jewelry front. So on the next slide, really summarizing, where do we go from here? If gold is going to hold $3,000 an ounce and make further gains, we need to see more demand. That demand can come from a couple of areas. It can come from additional central bank purchases, and as I've outlined, I think that's quite likely. But the second thing is that developed market investors, buyers of physical gold, buyers of ETFs, need to come back to the market. Now, we've seen that to a degree already in the ETF market, but bar on coin demand around the world, around the Western world, remains weaker than I'd like to see. If we get to the situation where central banks buy gold, ETF investment continues to be strong, and Western bar on coin demand recovers, then I think gold could be in for a very positive year. But what I would say is in my nearly 40 years of covering gold and markets in different ways, I have never been less certain about what the outlook is for economics and politics because of the uncertainty that is coming out of the United States political system. I'm going to stop there and thank you very much. We'll have time for questions at the end. Thank you.
Super. Thank you very much, John. Yes, just a reminder, there is the Q&A chat function within this webinar. If you would like to start submitting questions to either one of our presenters this evening. Right, perfect moment to segue into the Royal Mint now and what that means, that those all-time highs through last year and increased demand, and what that has left the Royal Mint with more recently. So I'm pleased to introduce our market insights analyst, Stuart O'Reilly, to take it from here.
Thanks, Toby, and thanks, John, for that amazing summary of gold. I thought in the time that you had to present that was pretty comprehensive and pretty enlightening. So that was brilliant. Thanks, John. I'm going to talk about the Royal Mint, our history of gold, and then our kind of product offering that you can buy and invest in today. So the Royal Mint is the UK's oldest organisation, and we trace our history back to a silver penny struck in London in the year 886. But we didn't start striking gold coins for probably about 400 years. And the first one that we created is in that picture there on the right-hand side. It's a penny for Henry III. It wasn't our most successful coin that we've ever launched, because very quickly the bullion value actually outstripped the face value of the coin, and suddenly, for some strange reason, those coins disappeared from circulation, melted down, obviously, by people who are just selling the gold. But roughly, from the medieval times right up until the early 20th century, gold was actually circulating as part of regular currency that people would spend in the shop in the form of gold sovereigns, for example. And so that was the kind of core of the Royal Mint's business for most of our history, creating those circulating coins that the economy needed to function. Obviously, recently, gold is not in our coins anymore, but we still work with gold. So in 2012, we actually created the Olympic gold medals for the London Olympic and Paralympic Games. They actually are made of sterling silver. They're gold plated. There's about 6 grams of gold in them, but I wouldn't mention that to a gold medal winner. And then we really embarked on a journey of focusing on our precious metals investment business shortly after the Olympics. We launched a website. It's now merged onto royalmint.com, and we've been growing that investment part of our business ever since. And part of that story is the launch of a physical gold ETC with Han ETF in 2020. So that's a gold product that essentially tracks the gold price that is listed on the London Stock Exchange, and you can buy that in pounds or a currency hedge version, and it's available across Europe as well. And then more recently, we actually launched an e-waste recycling facility. So that is taking the gold from printed circuit boards from old laptops and old mobile phones, recycling actually every element of those printed circuit boards, but using the gold to create jewelry. So that goes into our 886 jewelry brand, and you can see some of the bracelets from that range on the right-hand side there. If you go to the next slide, please. And then in terms of the kind of investment trends that we've seen at the Royal Mint in the last kind of 12 months, it was a year of 2 halves, really. And actually, you could probably say it's a year of 4 quarters, pretty obvious. But demand for gold from the Royal Mint's website seemed to kind of accelerate throughout the year, peaking in the last quarter of the year. You can see there that gold coin sales via our website in the last quarter were 206% higher than the last quarter of 2023. And I'll touch on why the main reason probably is in a second, but part of it is the price, the way the price has exploded in the last couple of years. I think people have really kind of resonated with that and seen gold's investment potential. And partly because of the price being where it is, we've seen a shift from the global market operating in 1 ounce coins. That's been the standard for the bullion coin market globally. There's definitely a shift though towards some of the smaller coins because of the price. So customers buying half-ounce coins, quarter-ounce, tenth-ounce coins, sovereigns, for example. So sovereigns are roughly a quarter of an ounce of gold. And that's really accelerated over the past 3 years. And in the UK particularly, the preference is definitely tilting now much more in favour of bullion coins. And if you go to the next slide, you'll see why. So UK coins are exempt from capital gains tax in the UK because they are legal tender. So that includes all of our gold coins, all the silver coins, all the platinum coins that the Royal Mint produces for the UK. They are capital gains tax exempt. And the most popular investment options for our customers are the two coins on the left-hand side there, the gold Britannia and the gold sovereign just below it. The gold sovereign there is slightly different color because it is 22 karat gold, but it still contains almost a quarter ounce of pure gold. And the price points for those products, you can buy a quarter sovereign from £170, or you can buy a monster box, what we call a monster box of gold coins. That's almost £250,000 worth of gold. And you might think, with the terminology monster box, sounds quite big. It's probably about the size of a shoebox, but don't forget, gold is very valuable. There's a lot of value in a small space. Go to the next slide, please. And if coins aren't your bag, then another kind of traditional investment option has been gold bullion bars. The Royal Mint's range goes from 1 gram of gold, which is about £105 or so on the website today, right up to a kilo of gold, which is in a cast bar form. So you can see the difference in those two images there. The bar on the left is cast, the bar on the right is a minted bar. The two cast bar options we have are 500 grams and a kilo bar, and then the rest of the range, smaller than that, is in minted bar form. And obviously, like with most things, the more you buy, the more you benefit from the economies of scale, because it is easier to produce a cast bar than it is to produce a minted bar. So that gets passed on to the customer in terms of the price that you ultimately pay for that item. If you go to the next slide, please. There's also digital gold. So when we're thinking about gold bars, you can buy gold bars that you physically own that bar, and it'll have a serial number, and you own that particular bar. But if you're not necessarily concerned with owning a full bar, you can invest in this digital gold product. So it says digital, but it is a physical gold product. It's 100% physically backed. If you invest in this product, you fully own the slither of gold that you've invested in, and a bar list is available on our website to prove that those gold bars exist in our vault. And this is really the ultimate in terms of economies of scale, because it operates on the 400-ounce gold bars, the London Good Delivery bars that are the market standard. So if you were to buy one of these bars today, I think the price is over $1 million for a 400-ounce gold bar, well over $1 million by now. But you can actually buy slithers of that bar from £25. And it's really flexible. So you can buy £26, you can buy £27, you can sell, again, increments of, I think it's 100th of an ounce. So really flexible in terms of the availability to buy it or sell it. And the last two products were also available in UK SIP and SAS pensions. So pensions can hold gold bars. So if you invest through your pension with the Royal Mint, you can buy physical gold bars that are individually segregated and stored in our vault, or you can invest in this DigiGold product where you own slithers of 400-ounce gold bars. And then the final kind of product option that we offer at the Royal Mint are themed gold bullion products. And you can see the difference here is in the design, it's in the mintage, so the number of items that we produce, which is limited. And really it's in the kind of collectability element of it. So these are kind of semi-collectible, semi-investable products that are designed really to help you add a bit of variety to your gold bullion collection and kind of enhance that enjoyment of that journey of building your gold bullion stockpile. And some of these products, depending on what you choose to buy, if you sell them privately, because of that semi-collector appeal, could potentially sell for higher prices on the secondary market. The example in the bottom right there is a Queen's Beast completer bar, a new product that we've launched, which is selling really well. And certainly it's the collectible element of that. It's the limited number of bars that we've produced that is driving that product at the moment. So those are the kind of investment options if you were to invest with the Royal Mint. And with that, I'll hand back to Toby.
Thank you very much, Stu. Yeah, that Queen's Beast completer bar has proved to be incredibly popular, particularly after the launch, of course, of the coin series as well a number of years ago now. So yes, right, let's get into some questions. I'll bring John and Stu back in for this. There's been some great questions in the chat as well, so I'll get to those in a second. But we had one that was submitted prior to the webinar itself, which will apply to both of our speakers this evening. But if I begin with you, John, there's been a bit of a rush, of course, to move metal before any potential tariffs come into play between London and the US. Could you explain, maybe for those that don't know, a bit of the rationale behind this and what it might mean for investors as well?
Yes, certainly within the gold market this year, within the traders, this has been the biggest talking point, much more so than the record high prices. The way to think about it is that the US is more or less self-sufficient in gold production and consumption. So it's a decent sized gold miner. It's got a jewelry business. It's got an investment business. And if you add the two of them together, they kind of net off. So you think, well, why are the threat of tariffs then affecting the gold market? Well, that's because of the actions of the traders and speculators. You can buy and sell gold in many markets around the world, and certainly the OTC market, the over-the-counter market that Stuart referred to in London, is the biggest and the most liquid. But there's a very large futures market, a gold futures market called the COMEX futures market in New York. Investors and speculators from around the world, actually, not just the US, they are long gold via futures. And the short position against that futures are banks and other financial players. So that doesn't mean they're short gold overall, of course, because they hedge those positions by holding gold in the large liquid OTC market. They know if they need to, they can take those large bars out of vaults in London, ship them across to Switzerland, turn them into 1 kilogram bars, which are deliverable against these COMEX contracts. And you can do that quickly and cheaply. And very little gold actually normally goes to physical delivery from the COMEX anyway. Most people take profits or roll those positions forward.
Fantastic.
But of course, when you get to a stage where tariffs will come in, if you were to move that gold from Switzerland to New York and have to pay a, I don't know, 10% tariff, 25% tariff, suddenly then the economics of this changed dramatically. So when Trump was elected, lots of gold made its way across the Atlantic. Something like 600 tons or more than 20 million ounces of gold has headed to New York, stored in vaults and repositories that can be used to deliver against COMEX contracts. And this has attracted a tremendous amount of headlines. I don't know how many times I've been quoted in the press explaining to people what's been going on here. It doesn't represent Americans buying gold desperately because Trump's been elected or because they're worried about the stock market. Rather, it's traders having to move material around ahead of threatened tariffs. Not something limited only to gold, I should add as well. Silver is probably even more distorted than the gold market. So it is something to bear in mind if you're looking at the silver market, is that the relationship between metal prices in London and New York have completely changed. So it's not really something that individual investors outside of the US need to worry about. I don't think it's been responsible for much of the rise in the gold price this year, but it certainly kept the market busy, that's for sure.
Thank you, John.
Just to jump in on that, sorry, from a Royal Mint perspective, that market really exists between, as John said, New York and London. So the London element of that is literally within the M25, and there are vaults there that house a lot of this gold for the London market. The Royal Mint is not part of that. The Royal Mint's vault is in South Wales. So we haven't seen some of the dynamics that those other vault operators have seen, where they've seen, lorries ready to carry the gold off to New York. We haven't seen that here. Our vault is completely separate, and obviously our customer holdings. So if you've invested in gold with the Royal Mint and you've chosen to store it in our vault, that is in our vault in South Wales, and it's completely yours. You will own it fully, so it's not on our balance book. We don't touch that gold. It sits in our vault until you tell us to do anything else with it. And that goes for DigiGold as well. So that is not on our books. That is owned fully by whoever decides to invest in that product. So that cannot be moved.
Super. And you mentioned DigiGold there, Stu. That's just prompted a question actually in the chat as well, which I'm hoping is a pretty straightforward answer. Is DigiGold VAT and capital gains tax free?
So DigiGold is VAT free, and that goes for the digital gold product as well as the digital silver and the digital platinum products. They are VAT free, but they aren't capital gains tax exempt. The capital gains tax exemption only applies to UK coins. Now, it doesn't mean that you can't buy it through a capital gains tax exempt wrapper. So if you were to buy digital gold through a SIP, for example, the SIP itself is tax efficient, but that's nothing to do with the product. That's to do with the wrapper that you're investing in. So on a product perspective, VAT free, yes. Capital gains tax free, no.
Super. Thank you very much. And you touched on our Gold for Pensions product as well towards the end of your presentation. We had another question in the chat. I'm considering the Royal Mint ETC Gold in an AJ Bell SIP pension. What points should I maybe take into account when deciding to buy this? Probably one for you, Stu.
Well, I think that really depends on what you're looking to get out of it, I think. So we're not authorized to, and we're not going to kind of give any advice on what you should or shouldn't be thinking about. But I'd say just generally, it's good to have a good idea of what it is you're looking to get out of that product, why you're investing in it, and that goes for any product that you buy before you commit to it, I suppose.
Brilliant, thank you. John, one for you here. It's a pretty short question. Is gold still being mined? And then probably on top of that, how much is it above the ground and how much is still there to be mined?
Sure. Well, gold is still being mined. About 3,600 tons of gold mined each year. The stock of gold above ground is about 210,000 tons. So the stock of gold increases by about 1.6% each year. And mining companies will probably continue to mine it at similar sort of rates for the foreseeable future. The one thing I would say is you would have thought that with gold prices at record highs, mines would be expanding production as fast as they can. Well, I guess they are, except that gold production has been basically static globally since 2018. So there aren't enough new mines and projects coming on stream to be able to increase supply to threaten the supply demand dynamics. So yes, there is still lots of gold to mine. It's getting increasingly difficult, harder to find, lower grade, higher cost, etc. So the mining industry is working as hard as it can to access these new deposits. It's not as easy as you might think.
Okay, thank you very much. Just on the topic of capital gains tax, if we go back to you, Stu, there's been a question in the chat around themed bullion and what is considered CGT free as well. I think there's sometimes a bit of a mix up, certainly when investors come to us, and I'm sure you would agree, Stu, where we say bullion products, we're referring to coins that are struck to a bullion standard as well as bullion bars. But where does the difference lie in terms of what is considered capital gains tax free and then what isn't?
Yeah, so the difference is UK coins, so that's any coin that's legal tender in the UK, is capital gains tax exempt. So that would go for the 50p's in your pocket, as well as it would for any of the gold coins that we produce. In terms of the theme, it doesn't matter what's on the coin. So it could be Britannia's, it could be Sovereigns, it could be Royal Tudor Beast coins, it could be Myths and Legends coins. If they're a UK coin, it's capital gains tax exempt. If they're a bar, doesn't matter whether it's cast bar or minted bar, the product itself is not capital gains tax exempt. That just applies to UK coins.
And that's actually prompted a question on silver as well and rules around VAT. Of course, you do pay VAT on coins that are made from silver here in the UK as well.
Yeah, so VAT is applied on silver and platinum coins and bars. It's not applicable to gold. Gold is VAT exempt. There is a VAT-free silver and platinum offering, which is the digital offering. Obviously, you can't have that delivered because you just own slivers of the bars in the vault, but that is VAT-free.
Super. Thank you very much. We'll stick with you, Stu, and John may want to jump in after this because it might be something within the market that he's heard a little bit more about. Would the Royal Mint, and of course, if there's not an answer for this now, we can always take it away and get back to anybody, and we will get back to all questions in the chat as well. Would the Royal Mint be interested in tokenizing gold-based funds, or is that something that's not necessarily been explored?
There are tokenized gold products in the market, and there have been for some years. It's not something that we're actively exploring. We're keeping an eye on it, like every other product, really, I guess, just out of interest. And if something develops and we think we might be able to do something interesting with it, then of course we'd consider it. But at this stage, I don't really see that it adds much extra value, I suppose, to buying either digital gold, a gold ETC, or trading physical gold. I don't know if John's got a different view.
Yeah, I'm very similar to you, Stuart. I mean, I think we've tracked 80 different gold tokenized things that have come along. Most of them have gone. There's a couple that have survived. They haven't gathered very much in the way of assets when you compare it to the ETC or the ETF market. I don't think that a tokenized gold product is particularly attractive to the people that buy tokenized assets like Bitcoin or other crypto assets. They're looking at stuff that can make them, 3,000% this month and get themselves a Lamborghini and then fly to the moon. And that's not what you're going to get from gold. As much as I love it, as much as I think it should be in your portfolio, it's a very different type of investment to a very speculative crypto asset. We are looking at the World Gold Council of tokenizing gold, slightly different, looking at the potential for tokenizing the wholesale gold market, the market that trades in London, to speed up and make more efficient the clearing and settlement. In other words, the back office stuff that goes on when people buy gold. This isn't considered, or this isn't envisaged to be a retail product, very much more something in the wholesale market. So you might see from time to time, news and talk about us tokenizing gold, but that's really just to make the gold market more efficient and cheaper for banks and ultimately consumers to get their hands on.
Super, thank you very much. And we'll stick with you, John. The US, this question's just come in fact. The US Treasury has its gold reserves valued at circa 43 US dollars per ounce. The current price is now above $3,000 an ounce. Do you see the US revaluing this, and what do we think then would be the global impact of such a decision?
Sure, I'm nearly right. It's actually $42.22, and for very obscure historical reasons. Okay, so the US could revalue that gold. That would then make the balance sheet of the US Treasury a lot bigger, and theoretically they could do a lot with that. They could borrow against it. They could swap it. They could do what they want. Really, they could even give it to a sovereign wealth fund if they chose to, that the US is contemplating creating. But the way I think about the valuation of gold on the balance sheet is it's an accounting thing. I mean, believe me, the US isn't going to sell you that gold at $42.22 an ounce. They would sell it at the spot price or something around that. So you don't need to revalue gold to sell it. And just because you revalue gold, you don't need to sell it. So to me, the revaluation side of it is it's accounting tricks, nothing more than that. There have been, however, some suggestions that the US should sell some of its official sector reserves and buy Bitcoin with it. Now, that's a very different story. If the US sells gold, then I think people will take a very different look at the gold market and the gold price as a consequence of that. The US is the biggest holder of gold in its central bank reserves, 8,133 tons, which compared to the second biggest holder, which is Germany, which is 2,359, I think. So you can see it's a big stock of gold. And again, think 3,600 tons of gold production each year. So if the US does something with its gold that it involves selling it, then that's a very different story. Revaluation, I couldn't really care less. But selling it, yeah, that would be something to where the market would take a big note of. Now, none of the suggestions so far have got very far. They haven't really been at the center of the U.S. administration, more on the fringes or outside of it. But it's something we're watching very carefully. But I go back to what I said before. My confidence in predicting what's going to happen, particularly from the U.S. government in the next couple of years, is at an all-time low. So do pay attention to that.
Brilliant. Thank you very much, John. An interesting one here, more so for Stu. Stu, we spoke a bit about DigiGold and the fact that we post bar lists on the website, so people know that DigiGold as a product is physically backed and allocated. There's a question here around allocation as well, but this time referring to the ETC. Who actually owns the gold when investing in the Royal Mint's gold ETC?
Yeah. Okay. So an ETC is essentially it's a debt security. So it's a security like lots of other securities that you buy on the stock market. With a gold ETC, what tends to happen is you'll have what's called a special purpose vehicle that is set up, which is essentially just a company that exists just to hold that gold. So it doesn't employ anybody, it doesn't, do any business other than just holding the gold. So you're essentially buying part of that. But you can prove that the gold exists to the level that it should do because we publish the bar list. So it'll show you how many securities have been sold, the gold entitlement for each of those securities, and then all of the bar list you can see there. Does that total add up to what it should do? So you don't own it directly as you would with a bar or a coin, but it's almost as good as. I'd encourage, though, if you were interested in that, all of these gold ETC products will have a prospectus. All that detail will be in there.
Super. Thank you very much, Stu. Last question here, and what I would say is those that are watching, as I said at the start of the presentation, we do have our account management team that we can put everybody in touch with. So following this, if you want to delve any deeper into certain tax implications of owning certain products, as well as the products themselves, I'd encourage, obviously, you to talk to them. Stu, you're obviously heavily involved and influential in the setup of our Golfer Pensions product. Could you explain, just as maybe as a light touch, and then obviously we have the account management team on hand, a bit more about that product and actually the concept itself?
Yeah, so I think it was almost 10 years ago now when the UK regulator decided that you could hold physical gold bars in a SIP or a SAS pension. So the Royal Mint itself doesn't offer the pension, so you'd have to have a pension, a SIP or a SAS pension, with one of the providers who offer those products. And you'd have to get in contact with your provider or the SIP operator, and through them you could set up an account that belongs to your pension and then buy and sell gold bars as you will. I think if you were thinking about it, it's something that is a very complex area, pension. So I would strongly suggest that you take some advice if you don't already have a SIP or a SAS pension. And then you can check on our website the list of operators that we currently work with. So if you already have a SIP with one of those operators, it should be relatively straightforward for you to get into contact with us and with them, and to kind of get the ball rolling. If not, we're happy to work with anybody, but it might be a little bit more paperwork if they're not already on that list.
Amazing. Thank you very much, Stu. Right, there are more questions in the Q&A chat. We will get round to answering them separately now that the webinar is coming to a close. There will be a recording of this submitted onto YouTube as well, the Royal Mint's YouTube, alongside our one that we conducted last week with the Silver Institute. Thank you so much for the brilliant questions, and for all of you that have taken time out of your busy schedules, I'm sure, to join us this evening. So all that remains is to say thank you very much for Stu for joining us, and of course John as well from the World Gold Council, where of course you can look on their website at the World Gold Council and the Royal Mints for any more news and information from the world of precious metals. Thank you very much all for joining us, and we'll see you next time.
Thank you.
Thank you.